Welcome back to Disc Media, a startup story, the podcast where I take you along our journey of starting Disc Media from the ground up. You get to hear all about our challenges and accomplishments as we either grow Disc Media or go bust. Either way, you're going to have a front row seat to hear it all. And along the way, we're going to have some special guests who share with us their wisdom and insights and what helped them along their startup journey to success. So get ready as we get into it and try to help those get better at what they do. Welcome back, everybody, to Disc Media, a startup story, the podcast where we take you behind the scenes of starting Disc Media from the ground up. And as the intro alludes to, we do from time to time bring in special guests, and we're fortunate enough today to have a very good one, Jason Fishman. Jason, how are you?
Doing great. Excited to be here, Ben.
Well, excited to have you. We were getting caught up just a little bit before we got started, and you got a really broad range of experience in raising money, which is a great topic because I think a lot of startups, founders, companies, was a little rough there for a while.
Oh, yeah.
The fundraising. I think we're starting to turn the corner a little bit. I'm going to let your expertise kind of guide us through that. But so Jason, co-founder, and what, co-founder or founder?
I like to say co-founder. My partner and I founded it together, but founder and CEO of DNA.
All right, which is a digital niche agency?
Yes.
How long have you been running DNA?
Since 2014.
Oh, okay.
Yeah.
In that time, how much money have you helped to raise?
Sure. Well, we started as a growth marketing firm. We got into capital raising in 2015. First through Regulation D, which allows for the solicitation of accredited investors, high net worth, high household income audiences. The laws opened up further for us to include retail investors through Reg CF, Regulation Crowdfunding, in 2016. Began work on Regulation A plus campaigns later that year too. That's the last acronym, last title I'll throw at you. So Reg CF, you can raise up to 5 million. Regulation A plus, today you can raise up to 75 million. And I've worked on over 500 investor marketing campaigns, primarily using these SEC exemptions, these SEC filings that have collectively produced 9 figures of capital. I've actually worked with fintech companies and Web3 cryptocurrency exchanges. Some of them have brought in billions in assets under management during the periods of us working, growing together. I've also worked on real estate campaigns and gold IRA. Anywhere we're targeting investors and bringing them down marketing funnels, we've been able to find our niche.
That is amazing. Well, one of the things that we like to get into, we're focused on entrepreneurs, we're focused on business people trying to sharpen their skills, get better at what they do, but everybody kind of starts from somewhere. So what are some of your earlier ventures? What kind of got you on this path of doing what you're doing today?
I like that question. Some people just want to focus on the now and what results are you producing. I'm always interested as a marketer in this story. I first got into marketing as an action sports consultant. I grew up here in Los Angeles, skateboarding, snowboarding, surfing. First agency I was working on those types of brands. Later, I became a Gen Y marketing specialist. Millennials were called Gen Y back then. We're talking 2009, 2011. And I eventually started working with a startup, a social gaming company, and was part of the fundraising process. There was only a few of us on the team. We successfully raised 3 million as seed capital, but it took so much work, so many different versions of the deck. I mean, literally over 75 versions I directly created. That was one that actually was funded. You look at all of the different campaigns you look at all the different startups that try to raise money and are not successful at it. It goes back to that experience with me. That being said, the social gaming company merged with an advertising sales firm. I went over there. The owner had a very successful exit in the past. I wanted to learn everything I could about paid traffic and being able to open up those filters and have audiences get to an offering page, a landing page. So much of my marketing experience before that involved campaigns that I believe didn't have the appropriate amount of eyeballs, the ability to get set amounts of people of your target audience to an offering page was very exciting for me and what advertising opened up. We created a mobile advertising network. Actually worked with a lot of print publishers, over 1,500 different titles. We'd run ads in iPhone and iPad magazines. I worked with many Fortune 500s. You name it, industry, budget level, timeline. I had stories, successes, wins from it. Really enjoyed ad tech. Created the marketing agency so I could work with startup to mid-market businesses and full stack, not just on their advertising approaches. Working with a full range of different groups, startup, mid-market. I found fundraising to be a common theme, whether we were working on the marketing section of their business plan, their pitch deck, a first campaign, which once successful would later be presented to their investors to get more capital, even being asked to participate in the investor meetings. The concept of then we're going to raise more money was always part of the conversation. So once I was introduced to these vehicles that allowed for digital marketing to bring in investors into deals, I knew, hey, here's somewhere I could be of direct value. This is where I want to focus. And we've seen groups grow from entry level valuations to hundreds of millions. We work with groups in some cases that have over $3 billion valuations and are raising funds on these platforms. And some of those started at $20 million valuations. So it's very exciting for me to be directly part of these groups' growth versus just some of the Fortune 500s I was working with in the past. It's even more fulfilling. On the front lines of performance, there's a lot of pressure around it, but it's very satisfying when it all connects.
That is, it's quite a story because, when people think about that process of raising money and, wherever you are in your business, like, for example, where is it that you start to get interested in a business that is on that path of trying to get financed?
So, if they're using investment crowdfunding, Reg CF, Regulation A+, Reg D, they have to file a form with the SEC. Form C, Form 1A, Form D, 506C, allowing for the solicitation. If not, in many cases, I speak at different conferences, I speak on podcasts, I work with different accelerators, I'll advise on growth marketing campaigns. And then the capital raise is brought up to me and I could point them down this road of, hey, you could work with the right groups on the legal side, accounting. You could work with the FINRA regulated portal where you could launch your deal and have your deal live on their site and have their audience of investors find you as you have more traction on these platforms. So in some cases, we're brought in once a campaign's already live. In other cases, they're in planning. Even when they're live, I'd put them into different categories of plateaued or scaling. Some groups are doing well. They're looking to add more traffic, more marketing to the mix. Others are plateaued. They need to find new techniques to be able to bring investors to their deal. We're just on the marketing side, so I don't work with groups to get the whole filing set up and in place. I leave that to the legal and finance experts, and we're often brought in later.
So when you're a business getting ready to engage in this, it's interesting to me that this fundraising effort kind of centers around the prospects of marketing.
Yeah,
right. Because you're marketing to people who are interested in investing. So getting all of those toll gates, if you will, crossed, important to that process. But how is this process, like marketing other types of products?
So a Reg CF campaign, the average investment last year, 2024, was $1,500. That means you get 1,000 investments. That's $1.5 million. Could raise up to $5 million on the filing. And those are averages. It could be a bit less, a bit more. You actually have to do an audit once you hit about $1.25 million, 1.235. I look at traffic projections and, hey, 1,000 investments, you probably need 50,000 visits. It's at a 2% conversion rate. So it's very much a marketing exercise. Again, I look at it as e-commerce for the stock, for the shares. You could compare it to other, $1,500 type e-commerce campaigns and some of the other transactions that as marketers we were tasked with initiatives to bring in those folks, bring in those individuals. But then you have the crowd component, social dynamics. Prospective investors are looking for that line around the block. They definitely don't want to feel like they're in an empty restaurant. No one likes that sensation. If they get to a deal and there's $8,000 raised, even $108,000 raised, and they're set out to transform an industry, it can be disheartening. It could provide a lack of trust, lack of confidence. Hey, these guys may not be able to cover their monthly burn rate. So the crowd effect can work against you. That same company, $208,000 raised, $508,000, $1 million and $8,000 raised, $1 million from, let's call it over 500 investors. That speaks pretty loudly. Wow.
Yeah.
This has been validated. People are interested in this. In fact, every time I come back to the offering page, there are more funds raised. There's more investors in here. I've tried to raise capital before. It's very tough to get an investor. Every time I come back, there's more people who have purchased stock and are anticipating those shares to grow in value over time and a liquidity event to occur. So, this is interesting. And then, like other digital marketing categories, consider landing page best practices, clear value proposition, social proof. Very good at reaching audiences that are coming from mobile devices, doing the glance test and getting them to move forward to the next step. All of the same conversion rate optimization exercises apply here. And everything that would live in a pitch deck, from problem, solution, team, industry growth. You actually have to be careful about forward-looking statements for company and the actual company growth, but you could talk about past performance. So you figure out all the best ways to tell the story and articulate it in an engaging fashion so that you can get a higher conversion rate, get more investors in, and stimulate the peer-to-peer marketing from there.
So if you are, let me attack this from the investor side, right?
Okay.
Because I think, this is one of those things that I think is kind of great, I think, for entrepreneurs and people who are in business looking to raise money, but also for people who are maybe looking to invest.
Mm-hmm.
How do you get into the stream of being on the receiving end of opportunities that you might be pushing out there?
Sure. Well, I'll tell you, those FINRA regulated portals, some of them are major websites such as StartEngine, Wefunder, Republic, Net Capital, all host a volume of deals at any given point. I think Wefunder has upwards of 160 deals live right now. StartEngine has over 50. So just signing up on one of those websites, we're not an affiliate or anything like that, but going through them, let alone signing up, you're going to be presented with all types of deal flow. I've had the creators of Reg CF, Title III of the Jobs Act on my podcast. I've had two of them. They were at the White House for the signing in 2012, before everything went live in May of 2016. And this was built to democratize access to capital for founders, as you were saying, as well as access to private companies and deal flow, and give the ability for retail investors to own shares in these growth stage companies. I gave that example of Boxable. They've gone from 20 million to a $3.5 billion valuation, have announced plans around their ticker symbol and public offerings. You hear these stories of what it would have been like if you invested in Facebook during the first round or during the first few rounds. And there's real opportunity around purchasing shares in a unicorn. So investors, the issuers, the founders, the startups. I say startups, but I'll go back to that term, growth stage companies. Regulation A plus filing. We've worked with groups this year. Multiple have raised over $50 million on their own on Regulation A plus in just an individual campaign. We've worked with groups that use Regulation A to direct list and go public. So some of them are much larger. There's a variety of different organizations and categories that could benefit from these exemptions and this type of marketing, and being able to proactively reach investors and take them down marketing funnels online.
That's amazing. So If you are if you're on the business end of this, then and you mentioned those websites, and I think maybe for some businesses that might be interested in going down this path, good place to start to maybe gather insight, information, what you might need to prepare yourself for something like this. Because it sounds like there's a few steps you have to clear, regulatory steps, before you can even get to this point. But then at that, you also kind of need to be in growth mode too.
Yes. I look at it as a marketing exercise as a whole. You're targeting people and telling them about your business. You could convert customers into investors. You can see investomers come from the other side of the table too, where an investor then becomes a super user, a super customer client of the product. And your overall audience, your exposure, your notoriety is growing. We've had clients succeed here and become Forbes 30 under 30 and all these different titles because of the inherent marketing value that they get. On top of the fact that we mentioned you need to drive enough traffic and have enough content to convert the traffic, it is a marketing play. And yes, you could go onto those platforms, see the live deals. There's another website I'll point out, King's Crowd. King's Crowd reports on all of these regulated portals, as well as the self-publishing platforms. There's actually tools where you can host these deals on your site. And there's a Invest Now button where the entire transaction can then be processed compliantly, of course. And yes, I applaud the fact that the SEC government has put these different measures in play. We don't want bad actors. We want it to be safe for investors. There's of course inherent risk, but remove any fraud or any dangerous scenarios from them. I think the filings take a little bit of extra time, but you could get through them. And you can see the stats on how these deals perform. You can see the stats on how the shares and valuations grow over time as well. King's Crowd's really built for investors. So I would point audiences towards their site.
So, one of the things I think about with all of this, we kind of went through a spell there in the last couple of years where investors are really kind of pulling back, right? A lot of people were hoarding cash because we weren't quite sure where things were going to be going. Are you starting to see a loosening up? Are people starting to come back to investing? Or from your perspective, did it ever really change that much?
Well, we saw a spike in 2020.
Yeah.
Phenomenon, if you will, where a lot more retail investors entered the market. Go into reasoning and explanations on why, but can tell you that regulated investment crowdfunding really grew during that period of time. Through 2021 into 2022, it was pretty stable for the next few years. There's been, slight dips and increases, but nothing dramatic. There is a power in bringing high volumes of small investors into your deal. Founders have shared notes with me about the valuation that they've put into their filing and how every investor needs to act on the same terms. So it removes a lot of the back and forth you may have with an angel investor, venture capitalist. And some of those groups and individuals participate in these rounds as well, and good friends and partners with many of those groups. Not to say anything bad about them, but you can set your terms, bring thousands of people more to your offering, be able to have them all on one seat at the cap table so you're not losing control, be able to continue to provide them updates, and even see, I'll use the term ambassadors come out of this where, hey, they're shareholders. They have an interest in your company. Percentage of them are going to want to share what you're doing and get people excited about it, even show off, a company that they have ownership in. Some of them are only coming in at, $1,000, $1,500 less, perhaps, wherever you set the minimum. So there are different reasons why individuals invest. If someone's coming in at $500, it's likely that they want to be a shareholder in your company, in your vertical, and find some type of fulfillment just by supporting what you guys are doing and being able to say they're involved in the space. An investor who wants to come in at $50K, $100K, to your point, Bennett, it could be more of an ask and tougher than past years. I work with a medtech group who works with many medtech, biotech issuers, companies issuing shares. We do as well. Some of those together. And they commonly say, and I hear from the founders that they work with, that med tech, VCs, I mean, it's really dried up. Quoting what I hear. And I think each vertical is a little different, but the difference of getting someone to move forward on a $100,000 investment, a $500,000 investment, or a $5,000, even $500 investment, they're completely different closing rates. The $500,000 investor probably doesn't even want to speak to you, or is at least okay converting online. So that's why we're able to use these digital tools, and have seen groups that have said they weren't able to get funding, at least at the terms that they were playing for offline, do extraordinarily well using these platforms. That's not every group, but I could tell you many of them would say that statement's true. Many of the top issuers would say that statement's true about their organization.
So with, AI is the hot topic. So many people are trying to figure out what to do with it, how to leverage it, how to accelerate what they're doing. As you look at the deal landscape, the companies that are out there looking to raise, are they more heavily weighted in that sector, or are you seeing a blend of things? I would imagine things are still very tech oriented, but is that always the case?
It's actually, the full spectrum of different industries, verticals, everything from breweries and local restaurants to mobile hardware, to your point of tech. We work with an influencer AI platform, and they have a SaaS product around it. I work with a variety of different companies that incorporate AI, data compaction, foldable tiny homes, tunnel boring companies, graphene companies, med tech, as I mentioned. And as it's tougher to get those larger investments offline right now, as founders have shared with me, robotic AI companies are definitely included in that. Alcohol, different types of beverage companies do very well at this too, because they could bring their customer base, the actual individuals, not just their B2B clientele, in to become shareholders alongside them. And I think that's a very powerful thing, something more companies are going to adopt over time, where they look to have a percentage of their customers come on board as shareholders alongside them, even as a private organization.
So it really isn't just in this kind of tech space. It
No.
sounds like it spans quite a lot of different types of. And you mentioned restaurants, which is kind of nice, and that's one of those industries where it can be kind of volatile, but at the same time, there's a lot that it takes to kind of bring them up. And is it establishing like a single outlet, or are these people who are looking to grow multiple outlets?
Many are expanding to a second location or looking to develop their product line further beyond the initial location. Others are just opening it up for individuals to invest alongside them. So one of the first campaigns I saw, not one we were working on, was $1 million in the course of a month, a little over $300 as an average investment from about 300 people. So you think of 300 patrons at a restaurant saying, yeah, I love this place. I'd love to be a shareholder. And you could actually put perks in there. They have to be available to every investor. Every investor has to be able to get the same deal. So you put in 500, 1,000, 5,000, 10,000, 25,000. Here are the extra items, bonus shares, recognition at the location that you get. So you get pretty creative with that, of course. By the way, film, entertainment, all different types of groups really have exciting perks. But for the restaurants, you then have patrons coming in saying, hey, look, my name's on the wall. I'm actually an owner of this place. They come in regularly. Again, marketing tactic, super users, super customers coming out of it, getting far more than just the capital itself.
You mentioned something there. People use this for fundraising for film projects?
Yes. I've spoken at various entertainment conferences about it. I've had a guest on recently on my podcast, Jason Brent's One Door Studios. They've run multiple 7-figure campaigns, calculated film, others that they've rolled out. Ran one for the Daniel film this year. I've run many over the years. And yes, picture names and credits, brunch with the director, invitation to the premiere. There's different perks you can add to it, all on top, of course, of owning the shares and being along for the ride on the business side.
I'm gonna have fun with you here for a second. So one of the things that I talked about when I first started Dist Media, our company, was, we registered as a Delaware C Corp. The ambition was at some point down the road, when we got further together around things, was to raise money, right? And, still trying to, quite honestly, figure out where that revenue motive is, right? Media companies are not raking it in. At least the startups like me are. So, but when you think about those companies out there that are doing podcasts, that are running websites and things like that, is this a space for people, for creators who are looking to expand what they do? Like, have you ever run a campaign, let's say, for an influencer that's looking to grow their space?
Yes. There are various types of thought leaders. Some like to be referred to as influencers. Some are in categories that are more professional services, financial advising, if you will. Some of them have more productized offerings. There is an equity crowdfunding platform, a FINRA-regulated portal that does strictly YouTubers, meaning YouTube influencers, and they're able to promote this to their subscriber base and have them invest alongside them. So yes, that's definitely something that's happening. Yes, that's definitely something we've done. And the use of influencers as a whole is encouraged. People don't believe what they see online. The more social proof, the more third-party validation, the better. Being able to include the likeness of a thought leader that a target audience follows in an advertisement, in the pitch video, in the offering page, in the email, or any content marketing that is showing up in follow-ups is connected to a higher conversion rate. I would tell you many digital influencers have already been involved in these campaigns, if not have been pitched the concept, and I would definitely look towards seeing more.
That is amazing. Like you're blowing my mind with the amount of range that this has. Mm-hmm. Because I think coming into this conversation, the thing I think of is, the software company, the tech company, the people who are maybe doing, $1 million or so a year in revenue and are looking to scale and blow up. But it sounds like, yes, there's that. And obviously, I would imagine that those are the more exciting things because, investors don't invest to not get a return, right? They invest because they expect to see some growth, some opportunity. But the fact that you can do this in a lot, restaurants, people who run digital platforms, podcasters, content creators, filmmakers, it really kind of runs the gamut. But it goes back to, though, setting yourself up properly as a business to position yourself to be able to raise those funds. Because I imagine there's a lot more accounting. If you don't love numbers, there's probably a lot more accounting that you have to do to make sure all of these things are properly captured, filed, and reported.
Yes. So when filing the Form C, when filing the Form 1A, there's all different types of information and reporting that needs to occur. I was talking about a benchmark. It's actually 1.235 million on a Reg CF, where you then need to get third-party audited financials, not just CEO signed financials, to get to higher levels. But, it's all compliance. We want to make sure everything is running clean, running smoothly. There haven't been, stories of people getting taken advantage of from a company not being real. Some of the companies have gone under. I would tell you it's a smaller rate than closures I see of businesses, let alone startup to mid-market outside of this space. I think because of the marketing infrastructure that's created to really see these things succeed. And then after a campaign, you definitely want to keep your investors updated at least every year. We work with groups ongoing where it's a quarterly webinar, a weekly email, something monthly perhaps. I really believe in that word, ambassador, investomer. These can be peer-to-peer marketers for you. So if you're arming the audience, even for a B2B company, this could be a solar company. energy company selling to B2B clients. But if the audience is enrolled enough and sharing the updates and saying, hey, look, we were just featured on this magazine. Our CEO is going to be speaking at this major conference next week. Look at this podcast appearance from our marketing director, our CMO last week. I'm always amazed to see how many people care about B2B brands in the follow-ups of the campaign and what's happening, what's being promoted, what's being shared thereafter.
So, your company and what you guys work on, what gets you interested in a company? Like, what captures your attention where you feel like you can really move the needle and help somebody out?
I appreciate the question. I will say I am not the expert in determining which company is going to grow and which company will not, because I would have been wrong in the past. I would say any honest marketing agency who works in this space, at least any of the FINRA regulated portals, would tell you the same thing. There's solopreneurs I've worked with that I had question marks about and ended up being some of the top performers. There are companies that had major athletes involved with millions of followers that grossly underperformed. So it's tough to say, hey, this company is going to work, that one's not. And if I was able to answer that question, I would be able to invest the same way, and things would be a different story. There's always going to be variables. That being said, Ben, one of the first questions I ask is about their audience, because the first stage of the campaign really needs to be fueled by their audience. If I get to that deal and there's no investors, it's like, okay, let me think about this for a sec. Does the founder have no family? There's no friends? Do they go to school? Do they have neighbors? Do they have anyone that wants to put the minimum investment in? On a Reg CF, minimum's usually $100, $500, maybe $1,000 the most. I'd probably say $300 would be a good average. So at a $300 entry point, you're really just supporting a team, supporting an individual when you're putting in your funds. I'll hear founders say, oh, I don't know any investors, or I'm exhausting my resources, where it's usually a bad sign. I want to hear a founder who is relentlessly going after new individuals, new groups to bring them on board. So I've had clients tell me they got in contact with everyone they knew. They were getting in touch with fraternity brothers that they hadn't spoken to in 30 years. I've had clients say that they went to meetups every single night, and a few new people a day. They were able to point at this and get little amounts, but it adds up. The average investment last year, again, $1,500. So if you have some people coming in at the minimum, some a little higher, maybe a few that are much higher, you get 100 investors at $150K, $1,500 average. That really goes a long way. Then you could start bringing marketing traffic sources, marketing channels to the mix. I'm pointing all this out because, again, it's part of the formula. If I'm speaking to a founder and they're thinking, our product's so amazing, we're just going to put it up online and we're going to be able to close the round. Statistically, that's not going to happen. So if I hear a founder saying, I think I'll be able to bring 100, 300K from our existing audience, our first degree network, I'm then interested in marketing channels and hearing what you say. I want to bring 100,000 people in the first 2 months. And, what channels do you recommend? And what types of creatives? And, we know these different people have said good things about us. Can we incorporate them into the creatives? And really looking at it as a marketing exercise. And they want to be one of the top 10%, top 1% of issuers. They're the ones who really get most of the capital. That's more of a standout to me. A team who's more focused on the activities to get to the end result versus merely the vertical they're in. Audience size plays a role in that. The other thing I'll mention is if it's reflecting current events, if it feels like a company, if it feels like a topic that I would be reading about in Apple News, which is aggregating content from various publishers for me that day, that week, and I'm on the phone with them, that definitely goes a long way. And we want our ads, we want our content to have that type of feel to prospective investors. So that's why that stands out to me so much.
So obviously you could go it alone, or you could hire experts who know how to really craft that message, get it into the right people, tell that story the right way. What does it take to engage your organization for people to do that? Is that something that will scare somebody off? Who's, is the price high, or is it a percentage of what's raised? How does that work?
Sure. Well, it's not a percentage of what's raised. We would need to be a broker dealer to offer that, to accept success fees. The portal can charge a percentage of what's raised, but they're usually not the marketer in the scenario. And if so, they're only one aspect of it. They'll still look for you to engage your existing networks, maybe work with additional publishers and advertisers, even agencies. We don't charge a success fee. Light agency fees, I would tell you the biggest expenditure is the advertising. And there's numbers used in this. 10x is what I point to the most. If you're spending $100K and raising $1 million off of that, that's looked at as a good marketing expenditure. Do you have to spend $100K up front? Absolutely not. Groups start with us as low as $5K a month. It's not the type of thing that carries a huge ticket at the front. You can absolutely test different traffic sources, see what's working best, ramp up. You can do a rolling close. Could take a while to initiate and receive the funds from your portal, and depending on the type of filing that you're doing, but rolling close, raise 100K, raise 250, take it out, reinvest portions of it back into marketing. So the campaign is funding itself. And yeah, I would say most groups start somewhere between 5 and 15K per month on their advertising spend. From what I told you, it could start a bit lower. I wouldn't recommend on an advertising campaign spending less than $100 a day, 3K a month. If you're running, say, 5 audiences, it's $20 a day per audience. If it's $1, $2 per click, you're talking 10, 20 clicks. It's very thin. I wouldn't run anything lower than that. It could be inconclusive data. But if you're starting, somewhere between 5, 15K per month in ad spend, looking to do it for 3 months or more, you could, of course, slow down, pause, stop an ad spend at any point, on most channels at least, so with or without us. But if you are then seeing results from there, you're going to want to scale somewhat aggressively at that, because a lot of these campaigns are pretty quick. So you really want to lean into it. That's what I've seen the top founders do. And whether you're looking to do all the marketing in-house or not, I would absolutely speak with experts, speak with DNA, speak with other agencies, speak with the portals. There's consultants that call themselves quarterbacks in the space. I would speak with quarterbacks. I want to see a higher success rate industry-wide. I'm an open book. I'm always happy to speak with individuals. I believe the groups that I've mentioned here would feel the same. And go off their tips, go off their learnings. If you could hire them even just to consult on the campaign, they may be able to see what's further down the road for you before it happens and save you a lot of time and money along the way. I would work with us. I would work with groups like that because, as an example, we have an audience, a database of over 1.8 million historical investment crowdfunding investors. So I could run ads directly to them. There's a lot of benefits to using groups, using publishers, using individuals who have a lot of experience in the space.
Yeah, that's one of the things that I was thinking of as you were explaining that is, one of the benefits of working with an organization like yours is that you have an audience of people who have done stuff in the past, looking to do things in the future. And so, it's kind of a built-in audience. I think sometimes as a business owner, you have your customers, and certainly some of those customers you could probably convert, but you have additional exposure to other people, to investors who, sure, they may become a customer, but right now they're looking for another investment opportunity. That I have to say, I mean, this is, it's an enlightening conversation to have around this, because I think a lot of entrepreneurs and business owners, especially those who are trying to, raise capital. I mean, I keep coming back to the restaurant industry, partly because COVID did such a number on that industry, and they're still just kind of coming back. have you seen any apprehension, any sort of, anybody being timid to get into that industry? Or do you notice some industries kind of raise better than others?
I mentioned med tech earlier. There's some verticals within med and biotech that are resistant to Reg CF and Regulation A plus campaigns. They look at more traditional methods and picture more of the historical investor profile, if you will. Others have adopted this and have done very well and continued launching rounds. I mean, you could do one every year. You could move into Regulation A plus, again, raise up to 75 million. There's recommendations in front of Washington to raise Regulation A plus up to 150 million. So there are some industries that are standoffish towards it. Still groups that are working on these campaigns within the space. Real estate's like that as well too. Real estate does a lot of Reg D, so picture 25, 50K minimums, some up to 500K minimums, but using these same marketing tools, but only to accredited investors. So you have to do more data targeting. You have to anticipate longer sales cycles with the investors, of course. But I really believe these are going to be the primary approaches towards capital formation in years to come. So much of our life is already lived online today. I envision what it's going to look like 5-10 years down the line. And of course, this is how we're going to meet new investors. Of course, this is how we're going to organize and bring thousands of retail, even accredited investors to the table to do very big, very monetarily heavy things with large goals and impact behind them.
So one thing that I kind of think about is the reach. Being in an internet world that we are, the reach is probably very global. Any challenges or issues when it comes to international investors, or the initial filings pretty much settle that for any concerns around that?
Sure. I'm actually part of the steering committee for the Global Equity Crowdfunding Alliance. Had a monthly meeting with them today. I serve on a variety of boards, Crowdfund Professional Association, and depending on the filing and how you structure it, you can market and accept investments from individuals in other countries. You would want to work with legal counsel and those who are putting together your filing on the finance side to structure all of that appropriately. There's another filing. I said I wouldn't throw another one at you, but there is one more, the Reg S, which is for international audiences. Again, you're going to want to really define who you're going after. There are also platforms native to Canada, like Funder, and others in Europe. Cedars and various other groups. So you'll want to really look into it and take it into account. I'm on the marketing side. I would tell you start with the marketing plan. Look at competitor audits, including which investors are coming from which markets, before building out your target audience personas, where they're living, the channels, the creative that go into all of this, and have a marketing campaign for each one of the countries that's different. You don't want to just launch the same thing elsewhere. But yes, there's absolutely opportunity for an international push.
So, as we kind of look to wrapping things up, one of the things I wanted to ask you about is what about this space has you the most excited for the future of things?
Well, as I started my career, I saw amazing products that had very little awareness, eyeballs around it. And I got into advertising, which, okay, now we're getting a lot more visibility. However, the majority of startups fail in their first year, I believe, because they're undercapitalized. Even 3 years, 5 years down the line, in much later stages, you'll hear business owners complain about capital and funding and speaking to investors. I've heard people say, as a CEO, that's your whole job, just raising more capital for this mobile app company, for this SaaS company, for this tech company, if you will. And I don't believe it has to be that way. Using digital marketing, getting the traffic, the visibility, the awareness of your offering, being able to give the opportunity for other people to invest in something you're so passionate about, your company, something you believe is going to make this mark in the world. you can look at a strength in numbers and have thousands of small investors come on board to raise millions of dollars. You can do that every year. You could take it to larger and larger and larger stages from there if your marketing funnels are continuing to perform. Traffic at a high enough conversion rate, replicatable, scalable using these digital channels. That's very exciting to me. The fact that you no longer have to rely on your connections and feel, hey, I know this guy from my country club or the sailing club, yacht club. Let me talk to my dad's friends. Let me talk to an ex-employer. Maybe we could get another 50K, maybe get another 250. That you can take it to the crowd, even on a Reg D and accredited investors, and being able to bring thousands of accredited investors. You're not limited to your network anymore. It is, for me, very uplifting about how ideas, how companies, how teams will emerge in the future. And I'm excited to be at the forefront of that. I believe there's a lack of understanding, awareness. I explain to people what equity crowdfunding, regulated investment crowdfunding is every day. I believe there'll be more mainstream adoption in years to come. I believe you'll see, you mentioned influencers, but some of the top A-listers, already seeing some of the top CEOs involved in these projects, even if they're just being quoted. This will become more of the conversation in business schools, in the media, in all different types of entrepreneurial communities. So again, to be in the what I'd call early stages of it is it's a lot of fun.
Yeah, I think for the general audience, I think a lot of times we look at GoFundMe, and when you talk about crowdsourcing, that's kind of the connection that people make. But there's this whole other element of it. People who specialize in doing this, which is what your company does, which is absolutely fantastic. I have to say, I've learned a lot. I've learned a lot about this industry, the approach to marketing and fundraising. I appreciate you, coming on and sharing your knowledge. This is amazing. I imagine we're going to find some useful people who are interested in this because, my own experience, I've worked with a couple organizations. I've done some business consulting and talked with some entrepreneurs and people who've had products, and fundraising is always one of those topics that, like you said, you go through your list of family and friends and close business associates, and then you kind of hit a wall. Good to know that this is an option that's out there.
It's an option. The founders, CEOs who are good at it find it to be a more attractive approach. And yes, I'm glad to hear you learn from it. I try to be an open book. I try to be educational about it. I say the same thing about my podcast. I learn from every episode and really enjoying the discussion. Glad we were able to get to this level of depth today. I've been on other podcasts where it's, hey, what's your name? What's your company? And 5 minutes later, you're off. This has been a very enjoyable discussion.
Oh, I appreciate that. Well, hey, let's throw some plugs. What's the podcast?
Test, Optimize, Scale. You can find us on YouTube. You can find us on any audio channel. Over 200 episodes, all with different guests. Definitely recommend people check it out.
Fantastic. Well, Jason, I appreciate your time. I appreciate you sharing your wisdom. And I very much thank you for taking the time to talk to us today.
My pleasure, Ben. Enjoyed it as well. Thank you for having me on.
All right. Thank you. Everybody else, thank you for checking out Disc Media Startup Story. Looking forward to the next one. For now, have a good one. We'll catch you when we come back. Thanks for listening to Disc Media, a Startup Story. This podcast was produced and edited by Ben Olmos and is a production of Disc Media Corporation. If you're interested in learning more about anything you heard on this episode, please reach out to us at podcast@discmedia.com. You can also get more information about this and other episodes or information about our guests by checking out dailypitch.news, our business and insights publication focused on helping managers, leaders, and entrepreneurs get better at what they do.